Prashant Jain is with us. He's founder and CIO at 3P Investment Managers. Prashant, good morning. Great to have you with us here. Thanks very much for joining us. And, I remember in our interaction at the sidelines of that Kotak event, I think which was the last that we've had on air, you said, it's one of the, it's structurally, this is the best we've seen for a long time in your career, macro-wise, etc. But there was this big disconnect between asset prices and the macros in that sense. So in that, a lot of things go to make that divergence, earnings, etc., which were a little slower. But this also was a big sentiment overhang, Prashant. So what is your first reading on the durable impact of this deal?
I think, Prashant, I would agree with you that this was a sentiment breaker, and I think it did. Our exposure to the US in goods exports is extremely low, and if you exclude the exempt categories, then that exposure is close to 1%. And these are also categories which have relatively very low share in the markets. So, I mean, I can completely understand the way markets are behaving. People must have been short or there is a lot of excitement. But I would expect, just like it did not have too much impact on the downside, I don't think there is any durable, meaningful impact on the upside either. But it's a very good thing to happen.
Does it? I mean, but Prashant, there's some sentiment is a powerful thing, right? I mean, feel good, and I mean that motivates people to take action. Do you think that perhaps, and it becomes a slightly, I mean, it's not our job to do it, but from a foreign investor perspective, those who were saying, when will they come back? This going away adds to the argument that you can kind of present, right? And it's all connected. It's a big one virtuous cycle. What's your sense?
Foreigners have been underweight India for three simple reasons, in my opinion. One was India was pretty expensive 18 months back. Second, earnings estimates were very aggressive. We were simply extrapolating the faster growth in earnings coming off the COVID lows. And finally, I think India was missing the popular narratives of these times, which is AI or semicon, etc. And these were the reasons why we saw so much selling. I think with the currency where it is, with the valuations having come off, with so much selling behind us, I think I would be a little more optimistic on foreign flows, and this certainly is going to help. Though the good thing in India is that the impact of foreign flows, one way or the other, is now quite small. Foreigners have sold 40 billion in 18 months, but markets, large caps have been flat. So I think when you are raising 5 lakh crores of capital a year, another 50,000 crores more or less supply, which is what foreigners do, I don't think it moves the needle meaningfully for the Indian markets. But I would agree with you completely that this could be good for a sentimental rally.
So you're saying that even if the FIs come back, it's not going to be a meaningful driver in terms of big percentage gains for our market, pushing us up towards, say, a 10% rally over the next few months? It doesn't...
Yeah. Nifty could rally if foreigners come back, because in Nifty there is hardly any supply of stock.
Okay.
And local funds in any case are buyers. But the moment you have good market sentiment, the supply of stock also catches up. So you were raising 5 lakh crores. If there is more money in the market, you may end up raising 6 lakh crores. So ultimately, markets will over time move depending on valuations and fundamentals. And I think the impact of flows is not that significant. Think of it this way. Why did the markets not go down when you had 40 billion worth of sales? So I'm not trying to underplay the role of foreigners for near-term movements, but longer term, these markets are clearly driven by local capital, which is far bigger, and also the supply of stock, yes.
So what is your view now, Prashant, on the markets 12, 18 months down the line, considering that we've gone through a period of time-wise, a little price correction, we've underperformed versus peers, earnings are expected to pick up, say 13, 14% by FY27. What is the view on the markets, and how are you constructing your portfolio, the advice?
I think we are constructive on the portfolio. Markets have time corrected for, Nifty has time corrected for almost 16, 18 months. India's premium over EMs has been reverted. Foreigners are underweight. There is hardly any supply in Nifty. And as you rightly said, earnings growth mainly led by banks pricing in lower deposits. Earnings growth outlook for fiscal 27 is mid-teens compared to single digit in this year. So I think we have said this on record also that the next meaningful move in the market should be on the way up and not on the way down.
Got it. Prashant, just a quick word on sectors as we look ahead, right? Now, this is a big marquee thing. It's happened, and thankfully it's come through early in the year. So where are your energies focused on? Is it which part of the market, in terms of finding those single stock opportunities, which could be wealth creators? Prashant, how do you think about it?
Prashant, I feel that large caps continue to offer better opportunities than small mid caps as a category. However, small mid caps have fallen quite sharply. So I think it is time for very, very selective buying into these names on a 1 in 10, 1 in 20 names would start making sense. In large caps, I think sectorally, banks, insurance, automobiles, I would say even software, these sectors are looking good. I mean, I would be not constructive on consumer staples and retail because these two sectors, I think, are expensive relative to their long-term growth prospects. And another point is in these markets, the dispersion in valuations is pretty low, and there are hardly any deeply undervalued sectors. So this is not a market where you can make quick or big money, in my mind.
Prashant, you said the lack of AI trades in India worked against India. Do you think the budget announcements related to data centers, tax holidays addresses that? India can become an AI services hub? That anti-AI label, can that go away?
I don't think data centers are a proxy for AI. They are a very highly capital intensive, very low ROCE business. It's a good opportunity for India, and it is great what has been done. But I don't think it is a proxy for AI at all.
Yeah. Sorry, IT.
No, on data centers, I asked that can it reverse the anti-AI label? That he says it's a good opportunity, but it's not AI, or as a proxy for AI.
Yeah,
but you said you like IT services, right, Prashant? Can you take us through the rationale behind it? Because when you look at earnings growth, while FY27 will be better than FY26, we're still looking at mid-single-digit kind of a top-line growth.
This sector has seen the maximum outflows if you look at the foreign selling last year. Why? Because many expect this sector to be adversely impacted or even disrupted by the adoption of AI. We have a slightly different view, and time will tell whether that view is right or wrong. We feel while adoption of AI will certainly improve productivity, but client spends are unlikely to come down. And therefore, these businesses may not get adversely impacted. On the other hand, as enterprises adopt AI, there is a fair chance that IT spends may actually accelerate. And these companies have proven to be very agile over the last 3.5 decades, and they have successfully navigated multiple shifts in technology. And we think this time should be no different as well.
Dark horse sector, right? In that sense. And it's underperformed for a few years. Sorry, you wanted to say something, Prashant?
I think, yes, it's sold off very sharply. If you look at the dividend yields, probably it is the highest. Currency depreciation is in its favor. And despite the anticipated impact of AI, fiscal 27 looks to be a better year than fiscal 26. So let's see how it goes.
Well, Prashant, great conversation and a very reasoned view coming through from you. And thank you very much for joining us here on CNBC-TV18.
Thank you, Prashant.
Someone who's got one of the best track records with regards to investment management over a very long time period.